quick little video and capture my screen on the good old S&P 500 and the Dow. And my own little prediction for my own edification again, and bolstering my sagging trading ego. Now, here's the long term, and the Dow is just similar to this S&P, but I recall that the dot-com burst and bubble and burst was right here, 2000, and it doesn't look like much now compared to all this over here, because the chart, well, it went down quite a lot, and we thought that was a big crash, and right around '02, the Federal Reserve really stepped in and started creating a fake market. The money printing and the lowering interest rates to zero and all this has nothing fundamental to do with production and the economy and the people. So all of this is starting to be a false market right up into the '08 housing crash. Now this crash was real enough because the people still thought there was going to be that markets mattered and they would sell or whatever. But no, right about here, all of a sudden, even a larger volume of printing money and all of this quantitative easing and so forth results in this enormous created false bubble of a market, which has nothing to do, again, with real value, real production, real value or standard of living for the people, you see. And then there, of course, was the crash in COVID, the COVID crash right here, which kind of like 9/11, the insiders, the BlackRock, State Street, and so forth, they were ready for that. They could do a little shorting there and a little buying here. And then, of course, this is a great opportunity to turn on the spigots, to print the money. And of course, this accelerates now. You see this acceleration. Incidentally, I have a MetaTrader here. This is a MetaTrader MT5 platform. Looks kind of old and basic, but this is the platform that you can create robots. You can automate trading, and very simple and straightforward and easy to do, and with in your usual parameters for manual trading. So I have the Dow here, and this is the COVID drop right here a few years ago, and this enormous run up. And what we have in present time is the daily, each bar is a day, is if you spread it out a bit, this kind of slows down and is kind of gradual going up, and then you have this drawback in the last couple of months, and you have an accelerated ramp up. And all this tells me is that it is going to take out all the liquidity and stops at the highs. And we'll look at the S&P 500. This level, it's accelerating towards it. So I have a long. Actually, this green dot is a buy. So I'm documenting this to myself. Again, this has no real bearing on production. This is a manufactured market. It's almost like stock buybacks. They are buying their own companies. The Vanguard and the BlackRock and so forth own and control even the large banks, the JP Morgans and the Goldman Sachs, and they put in the orders to buy, and they buy all the S&P 5. They're buying their own companies that they already own, keeping it all afloat and bubbled up. Anyway, the point is that they could drop it at any time. But the problem is the smaller players like us know that, and we short it at various times, and they keep it bubbling up and blowing out the shorts, big short squeeze. So they're not dropping it even though they could. And they can blow it up even bigger. So they can hit the stops here, and you'll see an acceleration, and then I start looking for round numbers. So 5,500 or whatever, because you're at 54 here, you might as well say 5,500. Right here is an acceleration for the S&P 500. So it's a round number. So there you go. You might see this spike here, and when there's a spike, then there's a sell-off generally. I'll watch it closely at that time, but that's my prediction to myself. I hate to have to go along with them, but instead of a logical, short, fundamental short, whereas, a lot of economies are in big trouble. No, we'll just blow it up here higher, blow out all the shorts. So that's all I'm making a record of.